Bitcoin has been trending to the upside as we've now pushed above the all-time high for 2023. And Ethereum is also looking extremely bullish, using this support level to potentially push higher, while this MACD histogram has been pushing to the upside, showing more bullish momentum for Ethereum. I'm also going to go over a bunch of altcoins today and the trades I've been taking, so make sure you're watching until the end of the video. Let's begin by looking at Bitcoin on the weekly time frame, because let's first begin by quickly looking at Bitcoin on this weekly time frame. I always begin trading every single day looking at the weekly time frame of whatever asset I'm trading. The reason being is I can determine which way the long-term trend is actually going, and through this area we have that positive sloping exponential moving average, which tells me in the market we just have a high probability of continuing to the upside, and that's what we've done every time we've come back to the average price. This 20 exponential moving average, which is this orange line on the chart, is known as the medium-term average price on each asset. So when the medium-term average is continuing to the upside and we're coming down to then use it as support, we have more high probability of then continuing to the upside. So I already know if I want to take positions on Bitcoin today, I want to be looking for only longs to the upside. Here on the daily time frame, we finally broke above this all-time high for 2023. Back on April 14th of 2023, we made that all-time high just over that $31,000 range. We've now pushed above that, potentially looking like we might go sideways in this area. Even it might take a little bit of time for the exponential moving average to actually catch up to the price. So once we get a little bit of a small decline, by the time this EMA actually turns over, we can use this value area as support zones to then continue to the upside. Also showing that the MACD histogram is showing continuous bullish pushes to the upside, meaning that overall, there is more bullish momentum and actually more buying in the market than there is selling. And obviously you can see that in the price. A very similar thing has been happening on Ethereum. We're now looking at the 4-hourly time frame, but the one difference that I see on the Ethereum chart is actually right in this area here of the most recent price action. So you can see through this area, we were basically in that trading range where we were unable to make high highs and we were unable to make lower lows. In this particular instance, there is a slight higher probability of continuing to the upside. So we want to look for those upside continuations. But what actually happened in the market? We've finally broken down below this level. Again, trading is not a 100% game. It is somewhere usually around that 60-40%. So there's still a 40% chance that this was going to happen, which is still a high percentage. And that's why you need to use the correct risk to reward and risk management strategy. So potentially, and what I'm always talking about is right here, we had that support level. Once support gets broken to the downside, price can come back up, use it as a resistance level before then continuing back down to the downside. So that's potentially what I'm looking at. And I just want to keep clear in everybody's mind that potentially right now, this is going to be that support and resistance flip where price is going to go to the downside. Since we did have a high probability of this happening and we failed out of that pattern, it now shows that it's probably around a 50-50, maybe 55% chance that we could at least see a little bit more downside in this current market, especially showing all through this area as we've had continuous downwards momentum in the MACD histogram. Even on these bullish days through here, we were still bearish all through here. Even on these bullish days through here, we were still bearish in this area. And even a little bit of bullish pushes through here, we were basically one higher and one lower just slightly. So again, showing that we were in that trading range market, but we did have a little bit more downside potential back here, also showing in the MACD histogram, telling us that there's more selling pressure in this area than there was buying pressure. Let's now look at Binance Coin on the daily time frame, and I'll quickly explain the trade that I've already entered and exited out of. I spoke about it in yesterday's video, but I'll explain it very quickly again today. All through this area, we had that negatively sloping exponential moving average telling me that I can only look for shorts to the downside. So even in this area, when you might think, oh, we're definitely pushing up to the upside, no, I'm unable to take long positions in this area. Reason being is we have a really strong sloping exponential moving average. So I just want to trade where there's high probability, and there's high probability of continuous downside momentum. So what I actually did was entered in the market right in this area here. I always like to enter as close as I can to the 20 exponential moving average. And on this particular trade, I used a 3% risk model, as when I'm always trading, I never want to risk more than 3% of my entire trading portfolio on any single trade. So if I'm trading a $10,000 account, $10,000, 3%, then equals how much? $300. Very, very simple. You can basically get the calculator out and do 10,000 times it by 0.03, as if you think 1 is 100%, 0.1 is 10%, and 0.3 is 3%. So you can times $10,000 by that 0.03 number, you'll also get $300. So let's just say I was trading a $10,000 account. I had a 3% risk, risking 3% or $300 on this particular trade. But when I'm going for a reward, I was actually going for a 3-to-1 risk to reward. The reason being is I potentially was going to go for this 4-to-1 because I did think it did have a decent amount to actually come down and retest the lows. But I thought in this area here where we've made a lot of price touch all through here, I thought there's a lot more actually clusters in this area, so let's get out in this area rather than try and absolutely sweep the lows. So I had that 3-to-1 risk to reward ratio. And even with this strategy, it only roughly has a 60% probability of continuing to the downside as soon as we get that touch. But what I am understanding is that when we do get that 60% probability chance, I get a really strong push to the downside. So I got a 9% trade in literally 2 days. I entered on this day, we got 1 day, and then on the second day, I was out of my trade. So literally in the trade for 2 days, and I was able to make over 9% on my account. 9.15 was the actual percentage, and then minus just a small amount of fees. So using that 3% risk to reward ratio with a decent probability strategy and also having risk management in your favor, you can see that I could take this trade over and over and over again, and I'll know that if I took it over 100 times, that in the long run, it will be a positive expectancy trade. Now let's even look at Dogecoin right now on the daily time frame. Looking at the daily time frame, again, we can see that we have that negatively sloping exponential moving average, completely different to Bitcoin, completely different to Ethereum. But through this area, we do have that negative slope EMA, which tells me, again, I just have high probability of continuing to the downside. And you can see every time in this area, we came back to the average price of that orange exponential moving average. We had downticks to the downside all through this area. Basically could have made a 15% trade. Then from here, have another trade, roughly that 9% gain on that particular trade. If you were to take these trades, easily could have made somewhere close to 15%. If you were to take this trade again, all the way down another 25%. So you can see how profitable truly this strategy is, just using that continuous momentum to the downside, because the probability is just in your favor. It might not happen every single time where the trade works in your favor, but if you can continuously find that strategy, trade it, and have that risk to reward ratio, and also using maximum risk management of 2 to 3% in your account, well, you're nearly guaranteed to be a long-term profitable trader once you're able to take those hundreds of trades. Even in the most recent price action, we have slightly broken up above this 20 exponential moving average. So when we actually compare it to all these prices through here, when we go back into April, so since April, we've never been able to break above the 20 exponential moving average, and this has now been the first time we've broken above. This now signals to me, although we might have a little bit more downwards momentum come into this area, this was the first time we were able to break above the average price, signaling to me that this long-term trend that's been happening for the last couple of months could potentially be over very, very soon. We might again see that little bit more of a downtick, but since we've got this first break ever since all of this area to the left, again, the probability is now starting to show that there could be a higher break above this area and potentially come above these prices all in this area. And these are the types of things you really need to be looking for in price, because when something's done something for the first time in a long time, you definitely want to understand that the tide could be shifting in the other direction, and potentially longs to the downside is maybe not right now the best strategy. Again, even showed by the EMA. The EMA has actually began to tick up slightly down, might go slightly up, and showing that we're in this trading range price action. Again, since we don't have that negatively sloping EMA like we did back in these areas, especially through here in this area here, then again, the probability is now starting to be shifted back around to that 50-50 and potentially 55% now that there's more long potential than short potential. Even coming over and looking at AVAX coin, it's a very similar scenario that's very different to Bitcoin. When we flip over to Bitcoin, you can see how we've had this really strong push quite recently. When we flip over to AVAX, you can see we had that really strong bearish push before we then have now been able to see some bullish momentum. And again, this strategy is working on all of these coins. We have this negatively sloping EMA all through this area, telling me that we want to take shorts to the downside, and nearly every single time it's worked. And again, this is the first time we've broken above the 20 EMA, and you can see how we're now starting to trend slightly to the upside. That doesn't mean a little bit of downwards pressure is not over, because we do have a little bit of a trading range in this area. Potentially price will come back into this area as known resistance. When resistance gets broken through, it will then act as a support level, then continuing again to the upside. So right now it's just signaling, also showing in the MACD histogram, that there is that bullish momentum potential. This has been the first time we've closed above the 20 EMA all the way basically since April 19. So it's been a couple of months where we haven't been above the 20 EMA. We've finally broken above it, now telling me high probability to the upside, potentially in the next few months. If you haven't already, make sure you smash that like button, make sure you hit the subscribe button and click the bell notification to stay up to date with all of my videos. And make sure to type a comment if you've been enjoying these trading videos. I'll see you in tomorrow's video.